All right, gang, so let's take a look at what I'm watching for the week. I'm out here on a daily time frame, and we're looking at the diamonds. We'll take a look at the four majors real quickly. The key thing I want you to note right here is on the diamonds, let's pull this guy back down. This is DIA is the symbol. We had a DSR major level, this red tight line right here, that came in and projected resistance. We popped right into that resistance level right here. Last week, we bought some puts. Market rolled back over. Right here, we bought the calls. Covered some of those right here, and then this guy rolled over. We made a lower low with a lower close right here on Friday, but I want you to look left right here and note we came right back into that previous swing low. So the swing low doji right here was at around 314, March 14th. You see all the structure support right here. So again, primary principle number one is structure resistance. Once broken, anticipated support. So we came off hard for 2 days. We came off hard last Thursday. Friday stopped, a little bit of a rally, and then right here we've got updated. Let me reload the data here real quickly. So we'll look for buying some calls here. I'd love to see this thing come back into the 159.75 to 160 handle, and then we'll look for a rebound back up into previous structure. If we break through here, so here's the if-then thought process. If we break below, close below, then I don't have any more interest until we press the 156, 155 handle right here. And again, we've talked a lot about the IS over indicator. Here's a perfect example of how to use the internal strength reading. Right here, we have a beautiful sell-off in the diamond. This is February, January into February. And right here on February 5th, we go extreme oversold. We're at our 200 period. I go turning point followed immediately by a black tip. So right there's the 2-bar cluster on the daily. Now again, here's what we do as far as tendencies. Ask a simple question. If I bought the next bar market, what would I have to risk? And I always want to have stops below the swing lows when I'm long. So there's the most recent swing low. You'll see right there my stop would have been about $4.50. $4.50 risk in the diamonds. Okay, so I risk $4.50, and then I go equidistant reward. So you see that the pop right there produced $5.82. So I easily attain target one as on a retest right here of this fib dot, this volatility band. All right, so we've got $4.50 in the bank, and now we trail stops on the balance. As we roll right up to this, we go extreme overbought right here as we're retesting our previous structure resistance zones, and at that point we're up $8 a share. Now again, time in the trade, you'll see that that was 20 bars of data, and it was 31 days. So on a trade like this, we buy the next month out on the option, or obviously you can just trade the stock. On the first part of the position, we can easily do a weekly option, because we're typically expecting us to get a pop right here that is going to occur over a 1 to 4 day period. Perfect for the weekly. And then if I want to see it right here, retest the swing highs that I note. This is the static swing as I look left. Then we're going to go ahead and go to the monthly. All right, so the market presses. We go here, overbought, higher low. We make a higher high in price right here. I did my fib extension on this leg. We went right to the 127. That 127, just a little bit higher than the previous structure resistance, and I've got a DSR major. So again, right there's the qualified sell signal. We'd call that an SOS5. And we've pulled back right now. So key price point, look left. If we pull back down into this area, then look for a cluster 2. A turning point followed immediately by a black tip. That's a 2-bar cluster. And we'll be taking a look at that in the level 2 as well. Now, how significant can that be? Well, let's look left. Here's the swing high from 9/18 of last year. Market retraces. Look left. We pulled back into structure support. Structure support. support right here, and we got the black tip buy right there. The turning point signal is behind here. So both of those conditions were met on one bar. So again, we ask the question, if I buy next bar market, then what happens? We buy the open here, pull backwards. This would have been my protective stop. So again, I needed to risk 461, 450. My equidistant target gets hit right here as we retest that previous swing high. This was the swing high at the time, and we were looking at a potential triple top. So we definitely want to get half the trade off right there. Then trail stops behind the fib dots, and you can see that trade, gone pecan, continues to head north. If I exit on the trail below the fib dots, I get about $9.50 per share on the balance as my fib dots are taken out right here near the open on January 24th. Continue to look left. Right here is turning point, followed immediately by the black tip. Buy next bar market. Now here's where we look at the ATR stop. From the entry on the next bar, it comes against me, 251. So again, the 450 stop easily held. And then again, if I risk the 450, reward, right here, the market's moved $5.50. So our 450 target easily hit. All of that occurring at the DSR level. Continue to look left. Turning point black tip. So again, just go back in and find your clusters. Really, really powerful. So with that in mind, again, we'll watch intraday on an hourly chart. If I get a qualified setup, I know that I'm at a key price point right here on the daily bar. So I love hourly buys, and these will be weekly options. Quick pops. All right, so let's go take a look at SPY. Right here, turning point black tip. Both of them occurred on the same bar, same visual as what we just saw in the diamonds. Here, I did the Fibonacci analysis. I inverted. I took the swing high right here, inverted, look left. There's my static swing. You see that we drove down to the 1414 Fibonacci extension and stopped. Last week I did the analysis on that, and I showed you on the hourly chart an ABCD termination point, 1-to-1 symmetry at a 1414 extension. We drove into the 1804s or 5s, and that held. And we've popped so far this morning off those lows. So I'll pull this in right here. Right here was the visual that we looked at last week. Okay, so now we're in the 120-minute time frame. We took the swing high that preceded the decline to that new structure low, outside return to this lower high, and then again we ask the question, what if? What if this measured move duplicates itself here, and we took our Fibonacci extension here to here, back up, and right there is the 1414 Fibonacci confluence with an AB equals CD, or a 1-to-1 symmetrical move. Yeah, so we went right into the 1800s. I think we were looking at the spider as well. There we go. All right, QQQ's weaker. So here on the QQQs, you note that we've driven down inside of a DSR level. So unlike those other two, here we've got a DSR major support. And as I look left, I can see the swing low formed here on February 5th. Obviously a beautiful reversal pattern. 84, we went straight north, $7. We're right back down into this exact same area. We've got bullish divergence down here. So we've made a lower low in price with a higher low, bullish divergence. And we'll see if we get a turning point black tip buy signal. Again, extremely low risk, long entries down here. We'll watch the hourly charts today and tomorrow for some quick weekly options plays as well. IWM, not quite there. Again, look at IWM. Here's that 2-bar cluster. Turning point followed immediately by the black tip. What if I bought next bar market? And again, look at a 2 ATR risk. Structure risk right here, $4. Highest high right there, 981. So 1-to-1 risk-reward ratio on the first half of the position. We easily get paid that first $4 as we rally right back into that previous high. And again, let me show you the importance here and the value of this fib. As this market's rallying right here, gang, this is still an active leg for me. Because it's an active leg, I will look left at the most recent static swing that's already set in the market. So from the swing low right here, I look left, there's the swing high. I measure that leg and take my fibs off of that. You can see right here the 127 comes in at basically 120. That's right where this market put in its beautiful, symmetrical double top. And then rolled back over. So this is that 2618 trade that we talked about last week. So I'm going to remove my RSI signal from here. Yeah, it's a swing trading. We're going to remove that. And let's just do a real quick focus on price. We'll get rid of the Keltner. And now all we're going to do is let's look at the way price moves. So we're going to come over here and we're going to take a look at the chart exactly as we would have seen it in real time. Let me move this down. So at the time right here, the market presses to this 117 handle. Now I'm looking for reasons to possibly get short, reasons for a sell signal. I don't have a DSR level up here. So I invert right here. I take this swing low, look left, and I run my Fibonacci projection or extension off of that. This is a static swing in the market. The market rallies into my 120 handle right here. And as it rallies into this handle, I promise you I'm overbought with an RSI. So from here, I'm going to look for this market to fade or pull back to a higher low, which we get right there. So from here, we go swing high. We pull back to the higher low right here. Where does that higher low exist? Look left. Same thing every time, over and over and over. Previous structure resistance. Tested again here, can't get through. Tested day 2, can't get through. Tried to get through it that day, and yet we closed right back at it. And then finally here, we make a higher high, higher close. So here's the new structure high, higher low, look left. Again, gang, go back in, train your trading brain, and drop these suckers in. Give yourself that additional visual reference. I see it, that's visual stimulus. I speak it, just like I talk to you right here, that's auditory. And again, what I'm doing is programming my trading brain. Because you cannot do anything in life or in trading without thinking about it first. So as I speak this externally, it becomes my new internal dialogue. And thus, it tells me what to look for next. Some of you that have been with us here for a couple of weeks now already know when I say new structure high, I'm going to say anticipated high or low. And you know after that comes look left. And so literally I'm programming your brain as we do that. New structure high followed by the anticipated high or low. Where might that high or low exist? Look left. Why? Structure leaves clues. Structure is price, price is truth. Period, over and out. Forget technical indicators for right now. Okay? All right, so the market pulls back to the anticipated high or low. It finds support there, as anticipated. Now I expect the market to rally back and retest those previous highs. And when it does, it puts in a symmetrical price pattern, known as a double top. One of the most powerful turning point patterns there is. So as we pull up to the double top, if I've got bearish divergence, I then go to a lower time frame, a 120-minute chart, a 240-minute chart, or a 60-minute chart, and I look for a sell signal against this 120 handle. If we get the sell signal, what do? We buy puts. Okay? Now, this, if I'm a seller up here, is clearly a counter trend trade. As the market pulls back to this higher low, if I get a buy signal right here, I'm trading with the trend. So I can see the exact same type of signal here that I might see right here. This I'm trading with trend. Some of you prefer to trade only with the trend. My Forex system makes about 65% of its profits trading with the direction of the market. So I realize, A, if I trade with trend, I'm going to pick up 65% of the profit. So if it did 10,000 pips, then 6,500 came with trend. B, I have to also be in a mode of acceptance. I have to accept the fact that if I'm taking only the with trend signals, then I have chosen not to take counter trend. That means that I'm not going to participate in the other 3,500 pips that were available on the counter trend trades. I have to be okay with that. I can't decide one day I'm going to be a trend trader, the next day I'm not, unless I have a valid quantifiable reason for changing that action. So for example, we might say, if on the daily bar I get an inside day narrow range 7, then I'm going to trade the direction of the underlying trend. How do I define trend? If a 50 is greater than a 200 period simple moving average, then the trend is up. I might look at the close relative to a 10 period moving average. So if I've quantified how I'm defining trend, then I'm okay with that. But too many traders will send me emails and go, man, it looks like this thing's going to the moon. It feels strong. Things like that. No, I can't stand those types of statements. Feel strong based on what? Now, sometimes we can develop a gut feeling, but it still comes from a quantified reality. So we might see, hey man, this thing really feels strong when, and so when I press traders, they can give me some quantifiable evidence. Well, bids outpacing the ask, or they happen to have 5 different indicators they look at on their chart, and then we can boil it down to an if-then thought process. All right, so again, this is counter trend. So we come over here, the market retests right here within 10 cents of the previous high. We've got bearish divergence, beautiful sell signal. Now again, this is a double top, a visual price pattern. It's a turning point pattern in the market. We then add relative strength, overbought bearish divergence. We then add additional strength to look left and see that we're at a previous area where the market not only stopped but pulled back $4 in this particular instrument. Okay, about 4%. And then finally, we drop down into an hourly, a 1, 2 hour, or a 4 hour chart, and we look for a qualified signal intraday here to get a short for a retest of that swing low. And sure enough, we come back down, and what took 3 days to get, we give back in 2 days for a quick 3 to 4% retracement back into, you guessed it, the 116.50s. Now again, if I get a buy signal here, we're going to buy them, anticipating a retest of this high. This would be a buy signal here again with trend. And if we break down and we make a new structure low, then we look for the 26.18 trade. So the 26.18 trade always starts with the double top. Then we take the lower low, lower close, and that is what I call the signal leg for the 2.618 sell signal. So this is market progression. I can do this on a daily bar. I can do it on a 55 tick chart intraday. All right, so when this guy pulls down right here like it's done, then I take my Fibonacci retracement right here. Here is my new structure low. So again, NSL goes right here. Look left. This is the swing high that preceded the drive to that new structure low. I then expect the market will come back up to the 618 retracement of that level, and I'm ready to sell them at the 618. We make a lower low right here, so what do? I go to that new structure low. The 618 is resting at approximately 118. Now again, intraday, I'll left click right here and I'll drop a sell limit in. I'll left click right here, drop a sell limit in, or right click, and then my protective stop has to go above these swings right here. I have to allow the market a pop back up to here to retest that swing high. There's the rally, still not short. Right there, I'm short on everything at the 618 retracement. So from the short entries right here, my risk is from 118 to 121, again, right above these swing highs at 120.60. So I'd be coming in at 121.10 on my protective stops. My expectation for the trade is for the market to roll back over and retest not only this swing low, but I expect the market to go to the 127 extension of that measured move right there. Come on, Ninja. Let's go, baby. I think... yeah, let's see if this works. Yeah, I'll just cancel it and I'll do it the old-fashioned way. Yeah, I had it set up to where it did it automatically. So I'll grab the fib extension tool, left-click at X, left-click at A, left-click at X, and there we've got an extension down to basically 112 would be my extended. Okay? All right, so let's go over here. I take half off right here as we retest the previous lows. So from my 117.75 sell, I'm taking partials at 114.25. So that's $3.50, about 1-to-1 or slightly better than equidistant on my initial risk. And then obviously 112 would be my second target. And you see we came to within 15 cents here intraday. So that brings us back to where we are now. So this is a wonderful example of 2618 sell signal, but again, it's the progressions. It's the progression of market movement. So let's kill this right here and let's walk through it. And again, traders, this is so powerful. And we'll look at this. I'll show this to you. It's wonderful to train your trading brain as well for the double tops. So we start with the double top. I added the 127 fib extension because I like to see valid reason for this market to stop at this level. I would also pull this down to a trading time frame, again an hourly chart, 2 hour, 4 hour, and I'd look, there's probably a double top that's present right there on the hourly around March 7th. Okay, we pull back as anticipated, we then retest that level, 120.20. This high right here was 120.55. So there is the double top. New structure low, followed by the anticipated lower high. Where might that lower high exist? Look left. 4 days lows right here was this day's high. We pop right back here, and then again, I'm using the Fibonacci retracement, which is the 618. I expect it to stop at or near this level, retest this low. I take half of my trade off here. Why? Because the market could come down here, double bottom, and then go straight back north. I want half of the position off for profit, and then I'm trailing stops on the balance. And you can see here that when we take our fib extension, and I go from this swing high to that low, our first stop is at the 127, our next stop is at the 1618. And the 1618 down here also happens to be, we'll take this swing high and measure this down to here, wait for it, the 1414 Fibonacci extension of the last leg down. So all types of symmetry present right here. That 1414 is going to drop in right in this 109.50 handle. And then finally, yeah, my fib trigger finger isn't so good this morning. Let's go here. Watch the symmetry. Swing to here. From that swing low, we rallied to here. So what if we duplicated? As we pop up to here, if we get that same measured move down, look at the symmetry. Literally, it's within 2% right here. Now, from here, I would have brought this over and measured, anticipating an outside return to around the 116.50 to 70 handle. You see that this 2-day rally was not as strong as this 5-day rally. So from here down to here, this came back to the 382 fib retracement before it went, retested the lows, made a new structure low. So let's take the value of this line right here and say, what if? What if this rallies back here around 113.35? What this is right now, gang, it looks like it's 1, 2, 3 drives to a bottom, We're just shy of our DSR level, but again, we've got a ton of confluence down here at that 110 handle. Let's just go back over here and take a look. Yeah, me and my buddy used to trade this on the 55 tick, 89 tick in the Mini Russell as an example. We typically need a market like Mini Russell, like gold or crude, where we've got a good tick value. We can do it in the Dow Jones, no problem. So what I'll do is I'll come back over here. Let's look at our Dow on the 150 tick. Okay, so we want to see double bottoms that are broken, double tops that are broken, and then the favorable excursion setup. Yeah, if we could put them in at a DSR level, that would bring some additional strength of signal. So here's a decent one right here. Our double top's not perfect. We go overbought right here on the Dow, higher low. There's a double top right there, off by about 6 ticks right here in the Dow. The key is from the breakdown, we go swing high. Here's my new structure low right there. We anticipate outside return lower high. There's my 618. Then we expect a retest of that low followed by the new structure low. Here's a double bottom. Yeah, so we'll watch it this week in the live room as well.